This conference will now be recorded.
All right. Good evening, everybody. This is Greg Morton. It is Saturday, September 17th, 2022, and this is the weekend update for Canslim Growth Stock Investors, brought to you by the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group. As always, for educational purposes only, not recommending any stocks or securities to buy or sell, and all investing has substantial risk of big losses. So we want to make sure that we learn first and only then invest. So topics for today, we'll look at the M factor as always. So what do we see this past week? Constructive action or destructive action? Hint, blown up by that CPI hand grenade on Tuesday, which followed sort of the Jackson Hole hand grenade from Powell previously. So we'll look at the current market, discuss it, things to study this week and going forward. And then we'll talk about our monthly educational meeting, which is coming up this Wednesday, immediately following the Fed meeting with the announcement that Wednesday afternoon. So M factor, as O'Neill teaches us, this is the most important letter in Canslim. And we interpret that, look at three things in this order of priority: actions of three leading stocks. I've talked the last 2 weekends about the three musketeers, which are the three market leaders right now. Are these going to survive? Can others join in? So we want to keep an eye on that. Actions of stocks owned, now a smaller group, and market pulse, distribution day count, price and volume on the indexes and the coloring book. So things were ugly, continue to get ugly. So let's take a look at those things. So let's get out of here and hop over to Market Smith first. So here's the NASDAQ. Let's go to the daily. So you can see this week, there was that Tuesday just really sliced down through all three moving average lines in one day. So we're below all of them. The 10, 21 are headed back down. We're back down to 30% line right there off the high. Just nothing really constructive. Friday didn't end up being a pink rally day. So who knows? The market has a sense of humor because it was also a distribution day. And if we look at the weekly chart on the NASDAQ, you can see we're down 5.48% for the week. Here's what looks to me: first leg down, second leg down, and working on potentially a third leg down. So we'll see what happens there, and we'll look in more detail at the percentages of those legs at our meeting on Wednesday. So S&P 500 looks similar. It's lost all the moving average lines, back down under. This is 20% off line on it, so we're back down under that off the peak. NYSE, same thing, lost all the moving average lines, just sliced through them. Dow, same thing, just really no difference in here. They're all moving in lockstep the wrong way. S&P 600, the same thing. So a lot of work to do to even recapture those moving average lines. And if we look at the coloring book, not much pretty. Everything's red. We have distribution days still piling up. We had distribution Friday, so now we have 6 on the NASDAQ, 8 on the S&P 500, and 9 on the Dow. As I said, we did have pink rally days on all of these indexes. IBD finally flipped to red on Friday. New lows are outpacing new highs. And I have only 6 buying days and 14 selling days, the way I count them, in the last 25-day window. So we have a a distribution dominant tape rather than an accumulation dominant tape. So again, we had this really bad day here. The NASDAQ was down 5.1% in one day. So that's most of your weekly loss, ended up 5.48% down. So just didn't look good. Did had a couple oil and gas try to break out, but even that sort of weakened at the end of the week. And again, we've got the Fed meeting results coming up next Wednesday. So let's go back. over here to our presentation. So we looked at those things. We'll look at the group teaching portfolio in more detail Wednesday. As noted, the action of leading stocks and stocks setting up to be leading stocks are what we really want to focus on. The three musketeers that I've been talking about are pretty clear. I think everybody agrees on these three. Anybody talks about strong stocks at least mentions two of these three. So Enphase, Celsius, and Shockwave are currently ones to keep an eye on, not necessarily for entries. We're in a bad market environment, but let's just see if these can survive, or is the bear going to maul these also? So those are in solar, retail, and medical areas. They're still okay. We're going to look at the charts in just a minute on those three. So some current market thoughts, things to look for. That 8-minute Jackson Hole speech by Powell was pretty much a hand grenade where he said there was going to be pain. And then we got the pain this week. CPI number came in hot and just really trashed everything. So it's very ugly. And also don't forget that starting in September, the quantitative tightening is supposed to double to 60 billion per month coming off the balance sheet and 35 billion per month coming off mortgage-backed securities. So we had the first 3 months of that, which were June, July, and August. So that was 30 billion a month, or 90 billion total over those 3 months off the balance sheet. They actually got close to that by the time the 3 months were up. They were within like 1.5 billion, but they didn't do anything on mortgage-backed securities in those 3 months. They're not talking about it. Those actually went up over the 3 months, and then they've gone up again in September so far, and they really haven't done any quantitative tightening in September yet either. So we'll see by the end of the month, do they get close to these numbers or not? So current market view, all the MMTS signals are red, window of opportunities closed, IBD flipped to red, it's a distribution dominant tape, as I said. Sorry, misspelled that. um, New lows each day are outweighing new highs. So the current market, the snapshot signs for me are clearly red lights, red flag, the no button, just very difficult to see any reason to increase exposure further until we see some of these changing. We got to see the three musketeers holding up. Are we going to see a new musketeer or two? Lithium, maybe. We'll talk about those in more detail on Wednesday night also. Do we get a follow through day? Wednesday is the earliest day that could happen, although we're way below those moving average lines. It's the window of opportunity. When's that going to open back up? Are we going to see MMTS signals get off of red, go to yellow or green? Are we going to start seeing more new highs than lows each day? And can the indexes even get back and retake these moving average lines and even turn them up? It's just Canslim works best when we're above an uptrending 50-day moving average line. It works it works better when we're above the 50-day, and it works best when we're above an uptrending 21-day moving average line on the NASDAQ. So we're nowhere close to any of that right now. And then do we see leading Canslim stocks setting up and some breaking out? So our weekend routine continually matters. So our monthly meeting will be Wednesday. I bumped it by a day. I changed it on the calendar because the Fed results come out Wednesday, so we might as well meet after that so we can see how the market reacts, at least for the first 2 hours of trading. So you register at the Stockyard Meetup site. The tuition's paid as you register, so that includes live attendance. You don't have to attend live, but you can. Recording, slide deck, links to any webinars, articles that come up. And first timers will get a courtesy copy of the prior month's meeting. So I've got the agenda together. So we're going to look at the M factor like we always do. Many teaching segments. We're going to cover Canslim teaching nuggets from Bill O'Neill, IBD Live, podcasts, Matt Caruso, and any other sources that I think are helpful. So those are sort of mini reminders, and some of those will tie back into other parts of the meeting later. We'll talk about Market Smith tricks and tips and tricks. There's a new ticker in there, or there's one I didn't know about. So we'll go over that. And then one educational topic, we're just going to flip through some stock lists. Our TML list, I've got some potential TMLs. Those are sort of second tier to keep an eye on. We're going to look at our ANTS list that we created at a prior meeting, our mutual fund accelerating list that we created at a prior meeting. We went over that, stocks owned, stocks sold, some IPOs that maybe are in the due diligence phase. Going to pull up an ETF family where they just have, I think everything they have is weak. So we'll look at those. And we'll look at our EV list and our EV cousin stocks list. And then I'll also do one longer educational topic on a SPAC short candidate. So we'll talk about that one and just walk through the details on it, just throw it out there and discuss it. We'll look at the group teaching portfolio, including a couple recent mistakes as the bear roared again, failure to follow rules. So we'll talk about that. IPO market, not too much to discuss there. And we'll do open mic Q&A. So we definitely will have a full meeting this month. So prior meetings, those can be ordered if you don't have your own written cell rules. I spent 3 months teaching that January, February, March of 2021. That's really, really important to have those. Great time to do that if you don't. And then we went through a complete weekend review in September and October 2021 using Market Smith, the newspaper, comparing stocks head to head and how to build a watch list. So questions or comments, meetup websites or the Greenville East Side IBD meetup site and the Stockyard meetup site. Use the second one to register for meetings. You can email me if you have questions about ordering prior webinars or anything else. You can follow me on Twitter, and of course you're on the Stockyard YouTube page. So there's a lot of other educational videos on there also. So that's it. I hope you have a great weekend routine, and I'm out of here.